Hi everyone, Eli here, and I just want to give you an update on my account, my AG short put position, and a possible natural gas covered call position that I'm going to be looking at for the next few weeks. And again, if you want to join my free private Discord, just email me with my email address below. So let me just show you what's going on currently for the HG short put position. It's currently up 26% of credit, and you can see all the stats for this position. So basically, the biggest thing is fundamentals haven't changed. If you followed me last week, the position was down around 50% of credit, maybe even a bit more at some point. So obviously, it's doing much better, and Theta is doing its job. Volatility dropped, and at the same time, again, the critical reason for the price to increase hasn't changed. Same for the critical reason for the price to decrease. These things haven't changed at all, which is a really big thing. You have to follow fundamentals. They will tell you exactly what's going on, and they will dictate your decision making. Otherwise, there's a lot of noise in the market, especially if price just kind of moves up and down. And in my case, price just moved against me, right after I opened the position. So it was just incredibly bad timing, and it's really hard to time the market, obviously, at least consistently. So this is where fundamentals are kind of coming in to bring some clarity to what you should do next if you're in a certain situation. So let me show you what it looks like on the graph. Let me show you the broker statement, and I talk about the NG cover call position that I might be looking at. Now this is my broker statement, currently up 25.45% on the year. I had one loss on a gold strangle, and obviously currently in the position. If the copper position is going to close profitable, I'm going to be up closer to 26% on the year, so it's not too bad. At the same time, this is what the position looks like. It's a 4.9 short put, and obviously this that Friday the price went up quite nicely, and I opened the position when the price was, well, I set the order when the price was lower, but the price kept going up and up and up. So I ended up entering closer when the price was basically at a multi-month high, and then it just dropped like crazy the day after. So it is what it is. Obviously, I can try and do a better job timing the market, but it's inevitable to get into this kind of situation, especially when you trade directionally. It's just the way it is, and you should be able to manage it with a small position size and following fundamentals, which, like I said, they haven't changed at all. If you just go to the news, you can see it's basically exactly the same as it was when I just opened the position. There's more demand and AI-related investment boom, so on and so forth. So things are very bullish for copper, and there's an expectation of rate cuts in 2026. Now, with natural gas, why am I looking to potentially do some cover calls on it, right? So it is the prices are relatively low currently, but it still does not mean that I'm going to be open a position right away. Volatility is good. It's marked in the green flag here. So if you look at volatility here, I'll show you what it looks like. Volatility, 1 year, underline 3 months. So volatility is really at a high of 3 months, right? So it's really good for us as an option sellers. But at the same time, I want to dictate fundamentals. Let fundamentals dictate my entry, right? So even though it looks like it's relatively low, in the wintertime, natural gas is largely affected by how cold or how much hotter than usual or colder than usual the temperatures are. And with that, there's a website that I use all the time. This is the Climate Prediction Center for the National Weather Services. This is basically like a government website. So we can see if we go to it's already on the 8 to 14 day outlook. We're looking at really above normal temperatures. So temperatures are hotter than expected, right? So this will mean not as much demand for natural gas as expected. So price is supposed to keep falling for now, right? Even if you look at a 3 to 4 week outlook, which is it can change quite a bit, but it's above normal, right? So I want to give it a few more weeks and see what's going to happen. As soon as we will see something that looks closer to maybe like, let's see here, if you look at it, 18 to 14, something that looks like what's happening over here. So it's colder than usual, or likely below than usual. So it's colder than usual. You can see it using this graph over here. And if you can see it throughout the United States, then yes, then this is probably a good sign to enter a covered call. Now, what kind of covered call am I looking to enter? Well, obviously I'm going to have to buy the future contract itself. And then I haven't decided yet what kind of combination I would do. I might just kind of buy it and sell some far out of the money options and or calls to be able to collect credit and just kind of, just play with it for a long time. Or I might sell an at the money call to collect the most amount of credit and maybe buy some far out of the money put just to limit my losses if price keeps dropping, right? And then the call side will be profitable either way, but I can still lose on the underlying itself. But it depends on what's going to happen. If the price is going to be really, really low, where I'm, where I will feel very comfortable just kind of selling calls on it and keep collecting credit for the foreseeable future, then this will be the thing to do. Because price eventually will either stabilize or will go up. And something similar has happened. Let me show you on natural gas. So I believe it was, I think it was in, the winter of 2023 where price went down, and this is not exactly what it looked like, but the winter wasn't as cold as expected, so price plummeted down to these levels, right? So this is basically the winter in 2024. And if you could have obviously bought it somewhere around this area, it doesn't have to be the very low. It's probably impossible to time the low again. But if you could have bought it anywhere here and just sell calls against it, you basically guarantee yourself a risk-free income for the most part, unless natural gas goes down even more. But historically, it's too low to be at this level and go down even more. At the end of the day, it's a commodity. It's not a stock. It's needed. Natural gas is a really, really respected and valuable commodity. So when it's too low, it will eventually stabilize, and you can just keep selling calls all along while holding the asset. And if things go against you on the call side, you can just keep rolling up until you're correct, because this is not going to cost you anything, because the future itself is going to be appreciating in value. So it will be offsetting your unrealized losses, and you're just gonna keep rolling. Up until now, basically, if you can keep doing it. So it's pretty sweet overall. Let's see what's gonna happen. It's just it's a matter of time of getting the right fundamentals and timing maybe the possible area of bottom for natural gas as best as we can, obviously. So thank you again. If you have any questions, let me know. I'll keep you posted about anything and everything I do. We're gonna keep it fully transparent, and hopefully you guys had a good year. I have one more, update for you by the end of the year. Then we are in 2026. So thank you again, and I will catch you in the next one.